Good on this end, okay. So good morning. And I have to stay here? That might be tough. Good morning. My name is Teresa Babin. I am the Director of Assessment and Revenue for the town of Southington. We started this educational process as a result of my request to town council to start a personal property audit program for businesses in town. And I went to the council meeting and they suggested that before we do an audit program, we give businesses every opportunity to make sure they are filing correctly, make sure they're aware of the requirements. And so I put together a PowerPoint presentation, and I'm kind of just going off the cuff, and I'm using my experience in the assessor's office here in Southington for the past 5 years with questions that we get from business owners and agents. We have CPAs that come in and have questions. They, of course, want to do the best job they can for their clients. So I put this together. It's not, really fancy. And, but it does, I think, have most of the information anybody would need. I'm going to start with the state statutes, so it's going to be a little dry at first, but the reason I do that is because a perception for assessors that we have to face a lot is that we are just making up rules as we go. We hear comments about the town not being business friendly. The town wants to, stick it to the small guy, or, I was just a day late. What do you mean I have a 25% penalty? And so there are actually state statutes in place that govern the assessor's office and this process. So I kind of wanted to take a little bit of that negative perception off the assessor's office if possible. And eventually this is going to be posted on the Southington Assessor's website. If you navigate to www.southington.org and then find the assessor's homepage, they're right on the front of the page. I didn't want people to have to look for it. So I put it right on the front, and there's going to be a series of links. So after the last session, there were some questions and answers. And while those, they were more informal, and I encourage you guys to ask questions at the end or even during this. If something comes up and you're not exactly sure, just let me know, and I'll stop. I don't have a problem with that. But the questions that were asked at the end or even during the last presentation, I then put on the website the question that was asked and then the corresponding answer. So that list can be used as a resource for anybody as well. This recording is going to be posted on the website. So this session is being recorded and the video will be posted on the website. So if you remember something that was said but you're not exactly sure and you want to go back and play the recording, you can do that. And the PowerPoint presentation is going to be up on the website as well. And as I stress many times throughout this presentation, if you have any questions or if you're talking to colleagues or business associates or anybody else that is in the same position of needing to file a personal property declaration and any questions come up, the staff in the assessor's office is wonderful, they're knowledgeable, and they're there to help you, as am I. So I just encourage you guys, we want you to be successful as business owners or accounting managers, if that's what you're doing. We want you to be successful in that, so we're here to help. So with that being said, we're going to get going, and the first thing is just to let you know with the state statutes that I mentioned earlier, there are certain indicators within the language of the state statutes, and these are laws that have been drafted by Connecticut legislators. And there are indicators such as the words shall and may. So you'll see in some of the statutes that I show you, there's different wording. Some of the statutes say shall, some of the statutes say may. And the statutes are laws, so that when you look at the language and you think of yourself in the position of the assessor's office or a state leader, a town leader, you're gonna hear the state saying, I shall do this. The assessor shall do this. The town shall do this. Or the town may do something where now there's an option to do it. You don't have to, but there is an option. And all town departments are regulated by statute to a certain degree, some more than others. I think that the tax collector's office and the assessor's office are one of the more regulated offices. And we say in the tax collector's office that that it's expressive in the statutes what the tax collector is able to do. If it's not mentioned in statute, then the tax collector has no express authority to do such a thing. So, so that's pretty much 100% black and white in the tax office. The assessor's office is the same, maybe a little less black and white because of assessment is more an opinion of value. So there's always going to be differing opinions as to value, and that's where there are some disagreements, and the assessor is able to use best judgment. Where in the tax collector's office, there's none of that. It's black or white. If your payment is late, it's late. There's no reason that we are provided to waive interest. And there are certain things in the assessor's office also. If it's late, it's late. So when we give taxpayers news that they don't appreciate, don't want to hear, it's not that we're trying to be mean or we're trying to come down on anybody. We're just complying with the law. The first statute we're going through, you'll see here I highlighted shall a couple times, and this is just the first statute that deals with personal property subject to tax. And also motor vehicles and snowmobiles, while you would consider those to be personal property, this is saying that those types of items are going to be taxed in a separate section, and that's, of course, the motor vehicle department. So when we're talking about personal property declarations, and if I mention motor vehicles, I'm strictly referring to unregistered motor vehicles, because if the vehicle is registered, that's going to get taxed through the motor vehicle grand list that the assessor receives every year. So registered motor vehicles and snowmobiles are not included on the personal property declaration. We're only talking about motor vehicles that you own, but they're not on the road, they're not registered, they're in a garage somewhere, they're in your backyard somewhere. That's considered personal property, and those types of items should be declared on a personal property declaration, whether you're a business or an individual resident. This statute is talking about the type of property that should be included in your personal property declaration. And again, it says shall. The declaration shall include, but not limited to, the following properties. So it gives you examples of everything that we would expect to see being listed in that document. This is a big one. This deals with the imposition of a penalty. And as you can see, it's shall all the way through it. So the due date for a personal property declaration is November 1st. The assessor's office will send those personal property declarations by October 1st. So you have a full month on which to complete that filing. And the postmark of the personal property declaration is considered timely. So if you get much like your tax payments, if you can get your envelope, if you're going to the post office and you can go to the counter of the post office and get that envelope hand stamped with a USPS postmark with a date of November 1st, even if we receive that mailing in December, that would still be considered an on-time filing. If you're bringing the personal property declaration down to the assessor's office, we would expect that it's in our office, in our hands, by the close of business on November 1st. If the office closes at 4:30, it would need to be in our hands by 4:30. If November 1st ever falls on a Thursday, we happen to be open until 7, so then you'd get until 7 o'clock to get that into us. We have been accepting email submittals also, because there's a time and date stamp on all emails that we receive. So as long as we get that and it's complete, by the end of November 1st, 11:59 on November 1st p.m. is still going to be considered an on-time filing. If there's something wrong with the declaration, then the situation changes, because the declaration filing has to be complete in order for it to be considered timely. I see a lot of personal property declarations submitted where there's no signature. That's not a complete declaration. And when time allows, if we get something like that in the beginning of the month of October, we're more than happy to make a phone call and try and reach that business owner or that accounting manager and say, hey, you may have forgotten, but this needs to be signed. Can you please get in here before November 1st and ensure that it gets signed? And that works. But if the declaration only gets to us on November 1st, there's no time for us to do that, to provide that service, do that favor. So it will unfortunately be considered late. So if the declaration is not filed before or on the first day of November, there shall be subject a 25% penalty. So if you have $100,000 in assessed value on that personal property declaration, there's going to be a $25,000 assessed penalty. We're not talking about a $25,000 tax bill. That's the assessment, additional assessment that would be added to the personal property total. And then the tax would be calculated off of that total. The penalty shall be added to the grand list by the assessor. Any declaration, as I mentioned, received by the municipality in an envelope bearing a postmark as defined by Section 1-2A, and that gets into the fact that postal meters are not accepted. So you have Neopost postal machines, Pitney Bowes, so, you run your mail through that meter. That's not considered a U.S. postmark. So it has to be a cancellation by the Postal Service in order for it to be considered on time. So an extension for filing. There is a provision that says a person may request a filing extension. So, and it shall be made on or before the first day of November. There used to be, when I first started in the Southington Assessor's Office 5 years ago, people could request an extension on December 1st. They could wake up one morning and say, oh, gee, I forgot to file. I'm going to request an extension. And it used to just be you could call up on the phone. So there have been a couple changes to that statute, and now it's pretty clear that it needs to be made in writing, and the extension request needs to be made before the actual due date. And it has to be for good cause. Yes. Emails are fine. Emails are in writing, are absolutely fine. And that it has to be for good cause. So the fact that you forgot isn't good cause. Even the fact that, the account manager is out sick today. November 1st wasn't the only data file, it was the last data file. So those types of requests are routinely denied by the assessor's office. But it's just good to know that there is a provision that allows extensions to be requested. Here's another one that says the word shall. So if there's no declaration filed, and this past grand list year, while we had approximately 2,300 personal property accounts, approximately 750 of those were non-filers. So 750 businesses in town did not file a personal property declaration. And that's not to say that they're getting away with anything, because this statute allows the assessor to fill out a declaration on their behalf using the best information that the assessor can obtain, and add a 25% non-filing penalty. So if there's an electrician in town, owns his own business, does not file a personal property declaration, the assessor's office is going to find a similarly sized electrical business in town, and they are going to use the information that's provided in that declaration to get an idea of what this electrician should have posted, should have filed. So we're not making up numbers. We do research online. Sometimes we make phone calls. We look up market value on certain tools and machinery, and we will go ahead and complete a declaration on behalf of that non-filing company. And if we come up with $1,000 assessment, which it's not going to be that low because we do have minimums, but let's say we come up with $10,000 in assessed value for this non-filing business, then we're going to add an additional $2,500 on as a non-filing penalty. So the total assessment that electrician is going to get taxed for is $12,500. So they're not getting away with anything, although sometimes there may be a situation where they keep not filing because they realize our estimates are a little low, so they're better off not filing. And in those cases, there's not too much we can do, but hope that we can get in touch with that business and encourage them to file the true and actual numbers, because that's all we really want. We just want to get the right information so that the town can collect the taxes on the appropriate level of assets. We don't want to inflate our grand list, and we don't really want to be short in our grand list, because that affects all the taxpayers in town. So we want to make sure that everybody is filing accurately. Similar to that, if somebody is filing a personal property declaration and they omit property, let's say they just acquired $1 million piece of machinery and they don't think anybody is aware. They don't want to put that on the personal property declaration. If it comes to the awareness of the assessor's office, that omission will be added into the declaration filing, and that $1 million piece of machinery then will also be assessed a 25% penalty. So there are ways that omitted machinery comes to light, or omitted furniture, fixtures, tools, and that is the audit process. And so we do, I don't think I'm in the same order as, yep, here we go, may perform an audit. Okay, so segging into the discussion of audits. So I did bring to the town council my request to begin a formal personal property audit program. In the past, before I started here, my predecessor would pick 10 random accounts and would hire an outside firm to perform personal property audit on that business. There was no rhyme or reason to the accounts that were chosen. It's meant to be a random process when you do it that way. So that would happen. And when you audit a business, you audit their personal property, and any adjustments that are found during that audit process will be made to the current grand list year that is being worked on by the assessor's office at that time, and they have the ability to go back to grand lists and make adjustments to those numbers. And as I mentioned in a previous slide, and excuse me, any omitted property will then be assessed a 25% penalty. So there were roughly 10 to 12 businesses each year that would receive additional tax bills with penalties in place because they had property that was found by the personal property audit. I don't necessarily feel that that was equitable. I don't think that, I mean, those 10 or 12 businesses each year probably weren't really happy about it. My feeling is that if we're going to do a personal property audit, it should be more consistent. It should hit more of, if not all of the businesses. We're not out to necessarily audit the mom and pop businesses that are in town. We certainly don't aim to put anybody out of business with the time that's necessary to conduct a personal property audit, which in my opinion isn't that much, because the auditor would go in there and request. They would actually, statute again dictates the steps that need to be taken prior to a personal property audit, and the first step is notification. So the business owner is going to be notified that we are intending on providing audit services, and they are going to be provided with a list of everything that the auditor is going to request. And if, you know, it seems to me that everybody's record should be in order. It shouldn't be that much of a stretch to think that you just go to a file cabinet and pluck out a year and then just hand it to the auditor. And again, I'm not a business owner, so I'm not exactly sure, but in a perfect world, I guess that's the way it would work. That auditor would look at all the documents. If you have a business that runs outside of your home, if you're going to the actual location, they'd probably want to take a look around and see what's on site. And then they would get to doing that audit and providing the assessor's office with documentation. They would also notify the business owner what the outcome of that audit was. And they would give the business owner an opportunity to sit down at a table and go over the findings and to discuss any disagreements. And the business owner, if still not fully satisfied with the outcome of that meeting, will have the opportunity to go to the Board of Assessment Appeals, which is a totally unaffiliated board, a 3-member board that would hear appeals regarding the assessment of the personal property. They don't answer to the assessor's office. I'm not even in the room when the hearings are held. And so it's a process. And we don't want to go to the mom and pops. In all honesty, a lot of the mom and pops are just paying a minimum assessment on their business assets. And and then when you look at the other extreme, I feel that the large corporations that are located in town, I feel that they have the experience, the knowledge, they know what should and should not be provided to the assessor's office. They actually do provide us with detailed asset listings, and I'm going to get into that in a little minute. The detailed asset listings are incredibly helpful to the assessor's office. It gives us an idea, instead of just saying you're declaring $3,000 in assets, it gives me an idea of exactly what comprises that $3,000. And then the assessor's office says, okay, does that make sense? Is that in line with what other similar businesses are declaring? And it also helps in terms of when you're adding new assets and disposing of old assets. To keep track of all that is extremely helpful in the assessor's office. When we see numbers that are changing on the personal property declaration and we have a detailed asset listing, we can follow, okay, last year they claimed this desk and this year this desk is not being claimed. So it's out there in black and white for us to follow, and we don't have any questions. It's crystal clear to us what's going on. So a personal property audit is just meant to get everybody on the same playing field, and it would be, from what I talked to the personal property audit company at the time, we would categorize, the businesses in one of two ways. I think it's either small mom and pops, mid-size, and then really large companies, or we would separate them by type of business, whether it's an eating establishment, whether it's a manufacturer, whether it's CPA firms, or just medical office buildings. So there's a couple different ways that we can stratify the personal property grand list to ensure that the personal property audit program is more consistent across the board, and that nobody's being singled out, and that all businesses are being held to the same standards, and that the residents in town are not having to pay more in their taxes due to the inaccurate filings of businesses in town. I hope that that was kind of clear. If you have questions about that, I'd be happy to answer them. But this is one of the statutes that deals with the actual audit program. And again, you'll see the shall is everywhere. This statute says that we as assessors are only required to send personal property declarations to out-of-town business owners or residents. So we don't even have to send personal property declarations to all businesses in town, just those that are, whose mailing address is out of town. But just so you know, we do send personal property declarations to all the businesses. And as I said, they would be mailed out by the end of September. There is a section on the personal property declaration that applies to expenses and expense supplies. And this is just explaining how that amount is calculated. And then just a couple of frequently asked questions. Everybody in possession of assets on October 1st is going to get a personal property declaration. Personal property is anything other than real estate and registered motor vehicles that has value by itself. And it's going to include things such as furniture, fixtures, machinery, non-registered motor vehicles, signs, vending machines, tools, machinery. And why must you file a personal property declaration? Because statute says you must. You get the personal property declaration by the end of September. You have the whole month of October to file. They're due back in the office by November 1st. And the personal property declarations can be mailed, they can be emailed, they can be personally handed to the assessor's office. Okay. So here we get to the actual declaration. I did hand out something a little, so you can hold in your hand if you're having trouble seeing the screen. Yeah. 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 Signs, if you are a gas station and you have the Shell sign outside of your business, or if you have a sign, or any kind of business, really, I'm just using gas stations as an example, but those would be declarable as assets. If you,
It's a sign you affix to the side of a building, that becomes part of the building.
but it can be removed. If you leave that building, if you are leasing space in that building and you hang out a shingle, and a shingle makes it sound a little less important, but you get my idea. When you no longer are running the business out of that, you're going to remove that sign. That's the difference. So again, here's the front page of the personal property declaration. Each personal property account has a specific list number that's going to be generated on the declaration. If you receive one in the mail, you should see that. And that list number stays with the business for the duration. The checkoff list on the front, that is for your use. It's just something that we put there to help you keep yourself organized, make sure that everything is completed on that form to ensure a successful filing. If you have any questions, again, we're more than willing and able to help you. And the declaration is going to include all the information, our email address, our phone number, our mailing address, for you to contact us. I suggest you, I'm going to go up ahead, let me go forward. Prepare a detailed asset listing and see if that helps you get organized. And it's a simple thing. It's not, it's not rocket science. The detailed asset listing should include the date of the acquisition. It should include the item itself. If you have, 6 chairs, we would want to see, 6 next to the word chairs, just so we know how many of that item you have. The original acquisition cost is what we're looking for. If you purchased a desk 5 years ago, the acquisition cost is what you paid for it 5 years ago. And then the code in which it will appear, and we'll get into that in a little minute. But the detailed asset listing is going to help keep you organized. It's going to be incredibly helpful to the assessor's office. There are so many businesses that don't include that. So all we get are numbers, and we have no idea what assets make that number up. And so it's incredibly frustrating for us. And so these sessions and all the postings on our website are meant to basically implore businesses to provide detailed asset listings for us. I wouldn't expect any assets to disappear off of that list. Perhaps they'd be crossed off when they're disposed of so that it's easy for us to keep track as well. Let me go back. Page 2. So once you've completed the itemized listing of assets, then you're going to take the total for each code. So you'll see where there are sections that have multiple codes. We ask that you circle the code that pertains to the types of assets that you're listing. Regular businesses, and when I say regular, I mean non-manufacturing businesses, I would typically expect to see something in code 16, which is your furniture, fixtures, and equipment. I would expect to see something in code 20, which would be any kind of computer equipment you may have. Code 24 for leasehold improvements, and the expenses. Those are typically the 4 items, the 4 codes that we would expect to see on a personal property declaration for non-manufacturing businesses. And if there are no amounts placed in those columns, the assessor's office does have the right to figure out whether or not that makes sense. Businesses these days, it just seems like every business should have a computer. And so if nothing appears in code 20, that's going to make us question what's going on. It's going to make us question the accuracy of the filing. So that's, and that's really the meat and potatoes of the declaration filing. Are there any manufacturers in here? I recognize you, but anybody else? No, okay, so I'm not gonna focus too much on the manufacturing.
I have a question.
Yeah.
What if some furniture or equipment is given,
Yeah,
and so there's no, just given and there's no value?
Yep.
I mean, there's no price.
yeah, I used the example of, and it's maybe to an extreme, but you're driving down the side of the road, you see an office desk on the side of the road and it says free. And you say, oh geez, I need a desk, or that's bigger than the one I have, I'm gonna pick that up. We understand that there was no money paid for it, but it is now becoming an asset for the business and a value has to be assigned to it. It could be a $200 value, but it's going to go, since it's newly acquired, it's gonna go in the top line, which means the most recent asset acquisitions are gonna go in the top line. It's gonna be assigned a very low value, but it's still gonna be declared. And we're still gonna see that this business has this desk, it's a new desk, and it then depreciates year over year. So it's not gonna be a $2,500 desk that you buy at Staples or some at Costco or whatever, but it's still gonna be the asset we are seeing it being declared on that form. And that's the most important thing for us, yep.
Do the leasehold improvements, line item 24 include repairs? Like, say you had some damage and you had to repair something?
Leasehold improvements are going to be any improvements that are made to the space that makes it your space. If you are doing business in your home and you have a lightning strike, and those obviously are not going to appear in code 24. But if you're leasing space in a strip mall or in an office building, and there are certain improvements that you've made because they're specific to the type of business you're running, you're going to put those in there. Yep. Yep.
Going back a second, you mentioned if you had personal property tax that you got rid of.
Yep.
It shouldn't just disappear
No.
on the chart, it should be Xed out. So let's say the following year, do you continue to maintain that Xed out property, or it disappears at that point in time because you have record of it?
I'm going to go into that.
Okay.
If you can just hold a moment, we will get there. Did I go? Yeah, okay. So this is the dissolution information. This is going to be the affidavit that we would expect if a business closes. if you move your business out of town, out of Southington into Plainville or into Cheshire, if you sell your business, this little square on the front page of the declaration needs to be filled out. So if you get a personal property declaration and you are no longer in business as of October 1st, you can't just ignore the declaration. You need to actually fill this part out and submit it to the assessor's office, and you need to sign it and date it. And the assessor's office is going to see that, and if they have any questions, they'll be happy to contact you. But at least we know that it's being attested to, that you've moved, you've sold your business, you've closed your business, and we will no longer bill you. If you just ignore the declaration, we're going to assume you're just a non-filer, and we're going to add assessment as we see fit, plus a 25% penalty. Those bills will stay on our system. They will continue to accrue interest. We do file UCC liens on outstanding personal property accounts. So it's in your best interest. It's so much simpler just to make a phone call and talk to somebody so we can get it closed properly, and then you don't have to hear from us again. First-time filers, there's the organized detailed asset listing. So when you have your total assets in that detailed asset listing, code 16, you're going to see a total. And you're going to take that total and you're going to put it in the corresponding grand list year, and then you are going to apply the appropriate amount of depreciation. So if you buy something brand new, you're going to put it, the original acquisition cost is going to go in that top line, and then you're going to multiply it by 95% because we are depreciating that brand new item by 5% right off the bat. I know it doesn't sound like much, but, and then you'll see every year after that, we're applying more depreciation. So your assets will depreciate year over year. You'll notice that the last column, it says prior years. Once an asset becomes a certain age, it's going to get lumped into a category called prior years. And the depreciation bottoms out at 30%, which is a huge difference when compared to anything you're filing for your businesses as it relates to income tax. Many assets just age out and you don't have to declare them anymore. That's not the same thing with municipal taxes. The straight line depreciation schedule that is utilized per state statute bottoms out at 30%. So you could have a desk that you've had for 20 years, it's still going to be assessed at 30% of its original cost. There is a difference for smaller items that are over 10 years old. There's a statute that allows a business to get those exempted off. If they are more than 10 years old and the item itself has an original acquisition cost of $250 or less, you can provide a listing of those items to us. They're going to be included in this schedule, but with the separate listing of those lesser assessed items that are over 10 years old, I will be able to exempt those off. So the only way I can do that, though, is if I have a listing of all the assets that fit that description. More than 10 years old and less than $250 original acquisition costs. There is a section down below. It's very small. I only give you 2 lines at the very bottom, but I urge you, if you have items that fall into this category, to list them out, and those items will be exempted off, so they will be removed from the total assessment. But you can't just say, I have $500 of items that fall into this category and expect us to exempt $500 off. I need to see the listing and the acquisition costs and the age of each item. Yeah.
When you say 10 years old, you mean 10 years from time placed in use or 10 years actually old?
10 years acquired. Yep. I think that's it on this page. This is also where, do I go into detail on that? Yeah. The disposals, here's where we're gonna talk about the disposals. So your detailed item listing, detailed asset listing is going to include all the assets that are owned by this business. I don't know how it's easier for you to file them, if you wanna do it chronologically by acquisition date, or if you wanna do it by code, put all your 16s together, and by 16s I mean all your furniture and fixtures and equipment. But the disposal list should look like this. And you are not going to include your disposals in this page. So I'm gonna see last year you declared $1,000 in furniture, fixtures, and equipment. This year I'm seeing you're only declaring $500. So I'm gonna say, well, why the difference? I'm gonna go to this page and I'm gonna say, oh, he's disposed of a $500 piece of equipment. And I'm gonna let that pass because it's been detailed out for me. If you just change the amount that you're declaring in that line with no explanation, that's not gonna fly. So we're gonna go ahead and add back in the amount that was used last year.
And zero it out on the Excel spreadsheet?
No, you keep it on the spreadsheet and just keep it, yeah, yep. Yeah. Yep. So I need to see on this disposal page, and again, they don't give you a lot of room. So if you want to send extra pages, if you want to do it in Excel, or if you want to handwrite it, it doesn't matter to me. It doesn't have to be fancy, but it just has to give the assessment staff a way to understand why your numbers are changing from year to year. When numbers increase, it's obvious, you know, you've added some assets. But on that detailed asset listing, I should see brand new acquisition dates and new equipment up at the top. And so that again, I'll be able to tie in to the addition of that asset code. I'll be able to see, oh, he added a $500 desk. So it's just a matter of trying to help the assessment staff understand what's going on with your assets, so that we don't have to call. And you know, it's listed out there for us, and it's crystal clear. And again, there's the $250 or 10 years, or, and, I'm sorry, 10 years old. This is page 3. Don't disregard this page because up at the top, it's asking for your name, your mailing address. If your mailing address has changed, if your email address or your phone numbers have changed, we want to know that, because if I need to call you because you submitted a declaration that doesn't have a signature on it, and I'm trying to help you out, and I call a number that's no longer in service, that's not helpful to anybody. So it also has boxes about what type of company you are, how many employees you have. That's all information that helps us too if the state of Connecticut ever wants to find out how many businesses we have that have 20 or fewer employees. I mean, I'd like to think they might have that information already, but if they need to contact us, or if the town wants to do something for businesses of a certain size or of a certain purpose, whether you're a manufacturer or service industry, retail, that information does serve a purpose for us. So I would urge you to make sure it's complete and accurate. On this page, there's some additional very important information, and it gives you the codes down at the bottom. It says property code and description. Here's where if you have, I don't know, a piece of equipment and you don't know what code it should fall under, this page is going to really give you a little more detail as to what types of assets we would expect in each code. So you are going to take the totals from this page, your depreciated totals on this page, you're going to take that and you are going to then slide it over to this grid right here. And that's going to be the end of it. There's a column on 2 of the pages that says assessor's use only. And I know there are CPA firms, accounting firms, it's a certain type of software that actually then goes ahead and populates, it rounds and it populates that column. And that really throws us off because the rounding isn't done the same way that we do it. And it says assessor's use only, so we would encourage you to not have anything populate that field. So if you're using CPA or some agent that is using software, it might benefit everybody if you mention to them, hey, could you just leave that section blank? And we're willing to help you with questions and answers, and we've given you all kinds of ways to contact us, and we encourage you to do that. That's it. We went through that. This is where on that final summary page, your code 9s or your unregistered motor vehicles are going to go. If you have horses or ponies, I know we have a couple of farms, we have a couple of stables in town. Horses and ponies, believe it or not, are declared as personal property. So down at the bottom, there's also a section that mostly pertains to the manufacturers here in town. There's a code that is going to allow the manufacturing equipment to be exempted. But in this section, there's also some farming tools, mechanics tools. You don't necessarily have to be a farmer or a mechanic to claim that exemption. But if you are claiming that exemption, you have to actually list assets in the farming tools category or the mechanics tools category. I need to see assets there. And I also need to see this box checked off. If you want to declare a $500 value exemption on your mechanics tools, then I need you to claim the exemption. I'm not just going to assume you want the exemption. And so the absence of a checked box indicates the waiver of any exemption you might be entitled to. So if you're claiming any of those exemptions, you must check them off. Sorry? Yes. The final page, this is where you're going to reference any kind of equipment you may be leasing. That equipment is declarable, and we need to know whether it's being declared by your business or by the leasing company. I've seen leases work both ways. So we are going to cross-reference any lease information we see here with the actual declaration from the leasing company, and we're going to see which entity is actually declaring. And then this final large box at the bottom is the signature page, and this is where I'm talking about if this comes in and it's not signed and dated, that's an incomplete filing. So you have to sign the declaration, and per statute, the failure to sign it, making it incomplete, would call for a 25% penalty. So we're just trying to get people, and I have to tell you, the assessment staff does a wonderful job trying to, obviously if it's hand delivered, we're going to check it before you leave, and we're going to make sure that that signature is there so that we don't have to chase you out into the parking lot. But if you mail it in, if you email it in, we're going to do our best, provided that time allows, to call you. But I would not rely on that. So do your best. And that declaration, the signature, is on that first page where there's a checklist. So if you utilize that checklist, there shouldn't be a problem. I added these 2 pages for manufacturers. Had there been any manufacturing businesses in here, these are additional forms that manufacturers need to fill out and submit. And again, the absence of this form particularly would waive their manufacturing equipment exemption. So, and this is just the detailed listing that could be utilized. So reminders, we're wrapping up here. The declarations get sent out mid-September. I strive to have them out that last week of September so that you have a full month to complete them. Declare any assets owned as of October 1st. So if you went out on October 1st and purchased a new lamp, we're going to want to see that on that declaration that you just received. If you got something October 2nd, that's going to wait until next year's declaration because you didn't own it as of October 1st. So the filings are due back to the assessor's office by November 1st. And I'm giving you all the information there about snail mail, emailing, hand delivering in order to avoid the 25% penalty, which you saw is something has to be done. I can't pick and choose who gets that penalty. It's across the board. If you're late or if you don't file at all, that same penalty will apply. And the earlier the better. We get, a steady stream of declarations submitted during the month of October. You'd be surprised at the volume that comes in that last week. We are literally processing declarations through the middle of December because so many come in at one time. So the earlier you can do it, the better. If there's problems with your declaration, we're going to be able to determine that right away, and you'll have plenty of time to get it fixed. And again, I want to mention that all this program, everything that you are hearing about now was put together at the request of Southington Council so that we could help assist the small businesses, or any business for that matter, understand the requirements of both the assessor's office and the business owners in terms of these annual filings. So I hope it's been helpful. And if there are any questions, now would be a good time. And again, I'm going to write these questions down, and then I'm going to put the answers up, the questions and answers. I will add them to the assessor's page. There are questions and answers from the first session that we had, and so I'm going to do the same with this one. So let me